Good evening, everyone. I'm C. Atisha Jain, the moderator of this webinar, and we're delighted to welcome you all in the webinar being organized by CPE of ICAI. It is my pleasure to be a moderator for the webinar on BRSR Core 2025 update, aligning with evolving ESG regulations and opportunities for CAs in UK. In a short while, we'll start this webinar. And first, I would like to apprise you about the CPE committee. The profession of CA is growing leaps and bounds, and its phenomenal growth has brought the profession at the forefront. Today, our profession has acquired an indispensable position in the business and economy. ICAI continuously aims at developing knowledge edge so that the members stand out to the expectations of the society. To achieve this objective, the CPE committee of ICAI has been continuously striving for perfection, integrity, and knowledge, which makes the word chartered accountant synonymous with excellence in service. In this direction, CPE committee has always been proactive to the emerging needs of its members, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CPE programs and providing adequate opportunities. So we have 2 sessions of 1 hour each, and the topics are BRSR Core 2025 update, which is being taken over by Pawan sir, and opportunities for CAs in UK being taken by Meenal ma'am and Praveen sir. Our eminent speakers will talk about the above mentioned 2 emerging areas of professional interest. So first, let me introduce you to our CPE chairman and vice chairman. So to introduce first, we have with us C.A. Satish sir. C.A. Satish Gupta sir is presently serving as chairman of the CPE committee of ICAI. In addition to his role, he is also chairman of UDIN Directorate and vice chairman of CMP for the current term. He has previously served as a council member of ICAI from 2019 to 2022. He's a renowned speaker and author specializing in income tax assessments, searches, surveys, and professional development topics like goal setting and career planning. We welcome Satish Gupta sir.
Thank you, my dear Atisha. Thanks a lot.
Also, we have please, sir.
Thank you, brother. Thanks a lot. And my brother, younger brother, definitely from Mumbai, WIRC, vice chairman of the committee, Vishnu Bhai. Our speaker, Pawanji, Atisha, moderator, and both of the speakers from UK in their absentia. Secretary CP committee, very dynamic, Ajit Bhai, and the team CP and the team technical, and my dear friends who are attending this webinar as usual in a very large number. Welcome to each one of you, and thank you each one of you for attending regularly our webinars. Friends, as promised, we are continuously working at how we can bring newer opportunities for our profession through the medium of these webinars. As you are aware that we are holding webinars on every Wednesday and every Friday, and timings are 4 to 6 p.m. I request each one of you that kindly mark your diary for every week and attend these webinars for 2 hours on every Wednesday and Friday. Friends, at CP committee, apart from holding these webinars, we are focusing this year that how we can make availability of CP programs to the last member of the institute who is residing in the remotest corner of the country. How we can do this? We are opening as many CP chapters, CP circles, just to make these webinars available, CP programs available to our members. Second thing which we are working on this CP committee this year, that we are focusing on the quality of the programs. We are also going to ensure from this year onward that the credit of CP hours is available to our members on real-time attendance basis. Repeating, real-time attendance basis, meaning thereby that if a member register for 12-hour seminar or 12-hour conference but attend only 4 hours, so he or she will get the credit of CP hours for 4 hours only. We are doing this with the help of technology, and the almost entire portal is ready, and just we are on the final stage of trial and user assessment. And after this particular thing, we will implement this, and we need your support. We need your feedback on our all initiatives, because all are being implemented, initiated for the benefit of profession and fraternity. Believe me, friends, that CP credit is now not a 2-year or 5-year-old. It is 20-year-old. 20-year-old, and I feel that now it is well matured. And now I think no CP should be given to our members without attending the program. Even I would go more that they should not register those programs just for getting the credit, just to have a credit, because if they cannot attend, they should not register. And believe me, we have started this thing in Jaipur in our 2 days conference of the AI, when we have stopped the registration 17 days back of programs that we are not getting no more registration. And we will allow the credit only on their real attendance basis. It is not on the basis of that technology which I talked you. We are implementing with other technologies just to start with, that member should feel good. So with this friend, that we are focused that how we can ensure the quality and the availability of the CP program. Second thing which we are doing in these webinars, we are requesting our foreign colleagues to come here and talk about the opportunity in their respective country. We are requesting the MSME experts to come here and talk about the opportunities in the government sector. We are requesting industry, our colleagues in the industry who are talking about the opportunity in their specific industry. So we are working a lot that how we can make it more effective and more available. So thank you very much, friends, for this time to which the support you are giving to CPE credit. I would also like to talk about something about the that UDIN. We have taken 2 decisions in the UDIN directed this year, which have been approved by the council also. One thing which is very important, friend, now we are restricting the member that they cannot generate 61st UDIN for their tax audit. Meaning thereby that every member has a quota of 60 tax audits. So they can generate only 60 UDIN for their tax audits. They cannot generate 61st UDIN for their tax audit quota. Likewise, our DTC has decided that if a partnership firm has 4 partners, so they have a quota of 240 tax audits. And now from 1/4/26 onwards, every member, every partner has to sign up their quota. Suppose a member, a firm has 4 partners, 60 each for 2240. All 4 partners have to sign of their quota audits. This we have made implemented. I think these changes should bring good vibes for the profession. Second thing which I want to discuss through the UDIN, we have made one very important change that if your auditee changes the auditor, changes you and join the another auditor, so you are not in position to know the name of succeeding auditor as of now. If your fees is unpaid, or if you want to communicate any technical issue to your succeeding auditor, but in wanting the name of succeeding auditor, you are not in position to do that. And that succeeding auditor has not intimated you also. So we, with the help of UDIN Directorate, making enable to our members that they can know the name of succeeding auditor in case they desire so. So these 2 things we have changed in the UDIN. Friends, I am Vice Chair of the CMP committee, and we have started one very important course, that GST litigation, and that has been launched in 4-5 places as of now. And the course is very good, and that is well being received by the member. Our target is to eliminate, to give the knowledge of GST litigation to all the practitioners who are in GST practice. So because they get new opportunity, and we are going in depth. We have, yes, definitely we are receiving several suggestions to make it more good program, more better program. So we are working on that also. So with these friends, I would not like to take much of your time. I wish you good luck. I wish you happy Raksha Bandhan. I wish, since we will not be holding the program on 15th August, even on Friday because of the national holiday, I wish you happy Independence Day also. So thank you very much. Thanks a lot for joining us. Thank you, Atish sir. Thank you, Pawanji. Thank you, my dear vice.
Thank you, sir.
Brother Vishnu Bhai. Thank you, Tiwari ji. And thanks a lot, Team CP and Team Technical. All the best. Thank you very much.
Thank you so much, sir.
Over to Atish sir.
Yes, sir. Thank you so much for giving us the knowledge about UDIN and CP work which we are doing. Also with us, we have CA Vishnu Kumar Agarwal, sir, who is the Vice Chairman of the CPE Committee. CA Vishnu Kumar Agarwal, sir, is a Central Council member of ICAI for the term 2025 to 2029. He's currently serving as the Vice Chairman of CPE Committee and Direct Tax Committee of ICAI. He's an esteemed member of several other key commitments of the ICAI. With over 2 decades of experiences, he specializes in income tax matters and has also authored the book Landmark Judgments of Income Tax. Apart from this, he has various social engagement and community involvement and hold key professional acumen and leadership roles which are dedicated to the both profession and society, which makes him a respected figure in accounting and taxation domain. We welcome Vishnu Kumar Agarwal, sir.
Thank you. Our own respected, the chairman of the CP committee and my elder brother in the profession, CA Satish Gupta ji, today's speaker Pawan ji, moderator, our secretary of the committee Ajitnath Tiwari ji, all my senior members, friends and delegates. I welcome all of you in this webinar for our best of the best speaker from the UK and Mumbai. Today we have called for enlightening the particular subject. Friends, I will not take much of the time and only I will apprise the 2 items. In this particular year, the council has approved the new format for the non-corporate SSC for profit and loss account, balance sheet and the other schedules. So I request each one of you, because this is mandatory from this particular year. So I request each one of you kindly take this format for the auditing, and if the SSC is not audited, their books of account, until this format is applicable for each and every person. Friends, the second measure, our Institute of Chartered Accountant of India and the Honorable Prime Minister Sri Narendra Modi ji want that one Indian Big Four must be created from the India to support the government, and also we also want that one Big Four must be required from the India. So we have prepared the guidelines, and all the guidelines are in the public domain. So I request each one of you kindly go through all the guidelines and give your suggestion how to we approach and we go to the Big Four from the India. Friends, apart from this, from Direct Tax, I am also Vice Chairman of the Direct Tax Committee. And the Finance Bill 2025, when introduced, the Select Committee has first invited the Chartered Accountant, Institute of Chartered Accountant of India, and we have given the close-by-close suggestion to the government, and more than 100 suggestion is accepted by the government Select Committee. But today, unfortunately, friends, the government of India, the Parliament has withdrawn this Finance Bill 2025, and it will be again reintroduced by the government of India. Friends, every Thursday, Friday, and Wednesday, we are doing good webinar for our all the members from across the country. I request each one of you, each and every webinar, we are calling from best to best faculty from across the country. So I request each one of you take the maximum benefit of this webinar. Friends, I will not take much of the time because today there are 3 speakers. So I request our moderator to introduce our speakers for our benefit of all the members. Thank you, friends.
Thank you, Vishnu sir. Now, coming on to our first session, let me introduce you to Sir Pawan Kumar sir. He is a chartered accountant. He's based out of Mumbai and has over 10 years of experiences in ERP system costing, indirect taxation, and insurance, and specialized in sustainability reporting, which is BRSR and GHG accounting. He is a GRI certified sustainable professional and ISO 14064 leader verifier. He has also developed a custom Oracle ERP based cost estimation tool, improving efficiency and data integrity. We welcome Pawan sir and help us to enlighten more on this topic. Welcome, sir.
Thank you, Atishay, for the introduction. Thank you for calling me here. I would like to really thank Satish Kumar sir and Vishnu Agarwal sir. And good afternoon to all the participants. And let's begin. It's 4:15 now. I will just share my screen. Right. So today we have come to discuss a BRSR Core 2025 update, how to align with the evolving ESG regulations. Let me first set the context. So the story of BRSR started in 2021 with a SEBI circular which stated that all the top 1,000 listed companies in India will have to start reporting on their sustainability parameters using the BRSR framework. Then, the next development on this was in July 2023, when SEBI came up with another circular on BRSR core framework, which would be used for, which is a subset of the BRSR framework and would be used for obtaining assurance, reasonable assurance for the listed entities. And the same BRSR core framework would be used for ESG disclosures for value chain partners. The next development in this area came in December 2024 when the Industry Standards Forum, consisting of the CII, FICCI, and ASSOCHAM, came up with industry standards. Basically, the industry standards resolved many of the pain points which was forwarded by the industry in making the BRSR report. The next and the latest development came in March 2025, where SEBI came up with a circular for measures to facilitate ease of doing business. Now, what this circular did is it relaxed some of the regulations with respect to BRSR. We'll see in the subsequent slides how it goes about. Right. First, the structure of BRSR core. As I said, BRSR core is a subset of the BRSR framework. It has got the most important 9 KPIs of the BRSR framework, 4 of which relate to environment, 3 of which relate to social, and 2 of which relate to the governance aspects. Coming to the environment aspects, talks about greenhouse gas footprint, water footprint, energy footprint, the waste management practices of the organization. The social aspect considers disclosures about the employee well-being and safety, gender diversity in business, and how is the business bringing about inclusive development. The governance aspect caters to the fairness in engagement with customers and suppliers, and how open is the business in its operations. In the subsequent slides, we will discuss each of these. But first, let us talk about the applicability of BRSR core and how the ease of doing business circular has changed the applicability. So, as we know, the top 1,000 listed entities need to use the BRSR core for their assessment or assurance. Now, this BRSR core framework is applicable for the top 500 listed entities in the financial year 25-26, which is the current financial year. Now, I'll take some time to discuss about assessment. What is assessment? Assessment is, you can say, if we put it in an order, reasonable assessment, reasonable assurance, limited assurance, and assessment. So what SEBI wants is a validation of all the sustainability related information which is put out in the BRSR framework, the report. It does not want an international standard of assurance like ISA 5000, ISA 3000 for a BRSR validation. Why? Because assessment would be cost effective and less burdensome. So what will govern the assessment? Assessment will be based on the assessment standards, which are yet to be notified by the Industry Standards Forum. So the Industry Standards Forum will come up with assessment standards, and on the basis of that, assessments can be done for BRSR, for the BRSR core KPIs. Now, the applicability on value chain. This circular on ease of doing business also changed the applicability on value chain. Earlier, all the value chain partners, up to 75% of the purchases and sales, were included in the BRSR core framework. But now it has been changed. Let us take an example and understand. Let's say ITC is a listed company. What ITC will do is it will list out its purchases in terms of its suppliers, and it will go up to 75% of its purchases. Then it will arrange them in descending order. So the value chain partners or the suppliers who have maximum transactions with ITC would be put on top, and subsequently it will be on the basis of rank. Now there is a threshold of 2%. So all the value chain partners whose individual transactions with ITC are above this threshold, in this particular case, the first 3 value chain partners, will have to supply or give their BRSR core framework KPIs to ITC to be reported in their annual report. That is ITC's annual report. Similarly, on the sales side, up to 75% of the sales, the customers will be linked, the value chain partners, that is the dealers, distributors, etc. And a 2% threshold will be applied. And all the value chain partners who cross a 2% threshold will have to provide their BRSR core KPIs to ITC for reporting. So again, I repeat, value chain disclosures will be a part of the annual report of the listed entities. Now, this circular has also revised the glide path. Earlier, this value chain scope was supposed to start from 24-25 financial year. But the same has been shifted to 25-26. And the mandatory nature of such disclosures has been made voluntary. So it is voluntary for ITC to disclose the BRSR core KPIs for its value chain partners now. Now the second part is assessment. The assessment of the value chain data was supposed to begin from financial year 25-26, which will now start from financial year 26-27. This has also been pushed back by another year. So that is about the applicability of BRSR core as it stands today. Now let's talk about the structure of BRSR core one by one. So the first KPI is greenhouse gas footprint. Greenhouse gas footprint consists of scope 1 emissions, scope 2 emissions, and GHG emission intensity. Now this word intensity, you will find it in a lot of places. In fact, all the environment-based KPIs. Yeah, we'll talk about it in great details. But let's talk about first scope 1 emissions and scope 2 emissions. BRSR core suggests the use of GHG protocol corporate standard for calculating the scope 1 emissions and scope 2 emissions. Let's take a sneak peek into what is GHG protocol corporate standard. Now, right from the basics, we'll discuss this standard. So there are 7 greenhouse gases. What these greenhouse gases do, they form a layer over the Earth's atmosphere and trap the heat, which is generally to be radiated in the outer space. By trapping the heat, they're causing the Earth to warm, which is known as global warming, a term which you must have heard, which is causing a lot of distress all over the world, like the recent floods in Gangotri. Now, out of these 7 greenhouse gases, carbon dioxide is the most prominent greenhouse gas, right? Now, suppose a company has to start its greenhouse gas accounting. How will it do it? It will first make a boundary called an organizational boundary, and it will identify all the sources of greenhouse gas emissions within this boundary. It could be stationary emissions, which could be a boiler or a furnace inside the plant. It could be mobile emissions, which is the fleet of trucks or cars which the company owns. It could be process emissions, like certain operations like aluminum smelting, semiconductor manufacturing actually release greenhouse gases during the manufacturing process itself. And fugitive emissions, which are unintentional but happen because of leakage or something else. Now, it will calculate and aggregate all these emissions from the sources which it owns or controls. Ownership and control. These are the two important points. Now, so all these emissions will come under scope 1. Now there is a second type of emission, which is indirect emission. All the companies need electricity. We'll talk from the Indian perspective. All the companies need electricity to run their operations. Now the consumption of electricity by the company is happening from the grid, electricity grid. Now what is feeding power or electricity to the grid? The power plants. Now in India, even today, 55% of the power plants are thermal, or that is based on coal or natural gas or diesel. So when we burn coal, natural gas or diesel, what comes out is greenhouse gases. So the consumption of electricity by the company is indirectly causing emission of greenhouse gases in the power plant. So the emissions due to the consumption of electricity comes as an indirect emission under scope 2. Of course, the company can also draw some power from renewable energy. Then in that case, the emissions would be 0. But if it is drawing from a grid, which is the Indian grid, then there will be some emissions which will be reported under scope 2. There is another indirect source called scope 3, which I'm not getting into right now, which is because it is not relevant for BRSR core. Now, there are two things which is required for calculation of emissions. One, the quantity of fuel consumed or the quantity of electricity consumed, that is quantity data. And two, emission factors. So suppose I'm using coal, then what is the emission factor of coal? What is emission factor? If I burn 1 metric ton of coal, how much of carbon dioxide or other greenhouse gases will be emitted? So these are the two things. One is quantity and the emission factor data. Now let's say BRSR core will be applicable for many companies in 25-26 who will be doing it for the first time, because the value chain partner reporting starts from 25-26. Now, we cannot expect all the companies to have quantity level data for all the cases. So in that case, how to manage, how to report greenhouse gas emissions? Now, the industry standard note gives a path which is called the spend-based method for GHG accounting. What is this? That is conversion of expenditure which is booked in the profit and loss account into greenhouse gas emissions. How to do it? Let us see step by step. So there is an expenditure in the profit and loss account. This is an audited figure, so we can rely upon it. This will be converted into quantity data using a public pricing information which is available. We'll come to it. Then we'll apply the appropriate emission factors on this quantity data. We will be doing it for each and every expenditure category. And then we'll be aggregating the emissions from all the relevant categories. That will give us the greenhouse gas footprint, I would say, for the company. So to summarize, greenhouse gas emissions is equal to the spend data booked in the P&L divided by the price factor into the emission factor. Let us take an example to understand. For the financial year 24-25, if a company has spent around 1 crore rupees on LPG and the price per ton of LPG was rupees 96,000, then the quantity of LPG consumed will be roughly 111 tons. The emission factor of LPG is 2.98 tons of carbon dioxide equivalent per ton of LPG consumed. So when we burn 1 ton of LPG, 2.98 tons of carbon dioxide equivalent is generated. So what is carbon dioxide equivalent? The greenhouse gases, all greenhouse gases emitted are to be reported in terms of tons of carbon dioxide equivalent. So if a methane has been emitted, then it has to be converted into carbon dioxide equivalent based on its global warming potential. I will not get into the details. For now, the emissions to be reported will be 111 tons into 2.98, which is 331 tons of carbon dioxide equivalent. So the expenditure booked in the P&L converted into emissions. Similarly, if the spend on electricity was around 5 lakh rupees and the average price of a commercial connection for that particular company size would be 9.13 per kilowatt hour, then the quantity of electricity consumed will be 58.328 megawatt. I've converted it into megawatt. The emission factor for 24-25 is 0.2727 tons of carbon dioxide equivalent per megawatt hour. So the emissions would be 58 into 0.727, which is roughly 42 tons of carbon dioxide equivalent. Now, couple of points for this. Where am I getting these emission factors from? These emission factors have been given in the industry standard note. But what the industry standard note says is, if we have got a better source of emission factor, an updated source, then we should use that. What could be the other sources? The greenhouse gas protocol emission toolkit is a good source. IPCC is another good source. UK DEFRA and US EPA may also be used, but IPCC and the greenhouse gas protocol is the go-to source for emission factors. The second point is, this is only a last resort, spend-based methodology. The greenhouse gas protocol does not prescribe spend-based methodology for scope 1 and scope 2 emissions. But it is an industry standard note which is giving spend-based methodology for scope 1 and scope 2 emissions also. So once the organization starts calculating its quantities or aggregating its quantity, it cannot go back to spend-based methodology. Now we'll come to intensity calculations. So we had seen here all the environmental related parameters had to have intensity disclosures. What are these intensities? The first intensity is intensity per rupee of turnover. Yeah. Intensity per $1 million of turnover using purchasing power parity exchange rate, and intensity in terms of physical output. We'll discuss about these two. This is a direct, rupee of turnover is a direct take from P&L, the revenue from operations in rupees crores. What is purchasing power parity based exchange rate? So a US dollar converted into, an Indian rupee converted into US dollars, not at the prevailing exchange rate or any other exchange rate, but a purchasing power adjusted exchange rate whose sole source should be IMF. This side of IMF, which clearly says India has a PPP based exchange rate of 20.66, should be used. This PPP based exchange rate, as we can see, is much different from the prevailing exchange rate of almost 88 now, because it takes into consideration the general costs and living standards of the countries. So this is the rate to be used for this intensity. Now we come to physical output. Physical output for a company like Tata Steel is very easy because they have tons of crude steel available with them. And what about a service-based company like a bank or something? In such cases, what the industry standard note has suggested is the use of full-time equivalent employees for reporting the intensity. What is full-time equivalent employees? Let's see with an example how to calculate full-time equivalent employees. Let's say the standard working hours of a full-time employee in a company for 52 weeks is 40 hours per week. So it is 2080 hours. There will be a leave adjustment. There will be a leave adjustment, assuming that there are 10 holidays and 12 paid leaves. That comes to 176 hours. That is 8 hours on a daily basis. So the annual standard hours for one full-time employee would be 2080 minus 176, which is 1904 hours. Now, let's say there are 30 full-time and 20 part-time employees who work for 57,120 and 25,000 hours respectively. We'll have to aggregate the hours for each of these employees, and then we have come to this particular figure. So the total hours worked would be around 82,000. So the full-time employees would be the total hours, that is 82,000, divided by the the standard annual hours of one full-time employee, which is 1904, which comes to 43.13 full-time equivalent employees. So that is how this particular parameter will be reported for service sectors. Moving on, the next environmental parameter is water footprint, where water consumption has to be reported, water consumption intensity has to be reported, and water discharge has to be reported. I will not discuss intensities anymore because it is the same thing for all the environment-based KPIs. So let's see how water is accounted for. So water is present in the nature in the form of surface, underground, municipal water, seawater, and other areas from where a company can draw water from. It's called water withdrawal. So when the company draws water, it goes through an inlet meter. Then the water is consumed in the company in its operations, that is in the production process, in the canteens, in the housekeeping, in the firefighting, etc. Then the water is treated, that is primary treatment, removal of floating solids, secondary treatment, removal of dissolved solids, tertiary treatment, which is the highest level of treatment where we actually disinfect the water. Then the water is again recycled back for operations, or in some cases it is discharged back to the nature through a outlet meter. Now it is very difficult to estimate what is the amount of water consumed. So there is a formula for it. The formula for water consumed will be the water withdrawn from the ecosystem minus the water which is discharged back into the ecosystem will give us the water consumed. That is what has to be reported. Now, this is okay for an industrial setup where there are water meters. What about a sales office or a branch office somewhere in India where there is no water meter? Then we will take the help of Central Groundwater Authority guidelines, which says that the estimated consumption per head per working day for offices is 45 liters. This includes drinking, flushing, everything. It's a very interesting document. So considering this 45 liters, this has been given by the industry standard note. So the water consumption for such offices, branch offices, will be calculated by this formula, which is number of employees. I'm not able to see this pointer. Okay. Number of employees and workers into the number of working days into 45 liters. That is how the consumption has to be estimated for such offices. And suppose the office is somewhere in a complex where one building does not have a water meter, but the entire complex has one. So as expected, the water consumption for this particular office would be proportionately done based on the area it occupies. This is the formula. Now, energy footprint, wherein the companies have to disclose the amount of energy consumed, the percentage of energy from renewable sources, and energy intensity. There are two main sources of energy. One is fuels, the other is electricity. What are the non-renewable sources of fuels? Coal, LPG, natural gas, diesel, others. What are the renewable sources? Biofuels and hydrogen. Energy in gigajoules. So energy is something which has to be measured in terms of gigajoules, joules or higher unit, which is gigajoules or terajoules or petajoules. So I'll give you just an example. Gigajoules, energy in gigajoules would be consumption quantity. See, again, here we require consumption quantity of the fuel into the net calorific value for the fuel in gigajoules. Just like the estimate factor earlier, we need to have the net calorific value in gigajoules for the fuel. Taking an example, Quantity of LPG consumed is 3,000 metric tons. The net calorific value for LPG is 46.1. So the energy consumed would be 46.1 into 3,000, which is around 138,000 gigajoules or 138 terajoules. Similarly, for electricity, the non-renewable sources of electricity, basically the thermal power plants, would be the coal, diesel, natural gas, and the renewable sources would be solar, hydro, wind, and nuclear. Again, energy in gigajoules would be the consumption in megawatt hour, again quantity required here, into 3.6. This is a standard formula. So the quantity in electricity consumed is 3,000 megawatt, let's say, out of which renewable sources in megawatt is 300. So the energy consumed would be 10,800 gigajoules, and the percentage from renewable sources would be 10%, which is what has to be reported here. Percentage from renewable sources. So that was about energy. Coming to waste management. Now this is going to be a hard nut to crack. So there are 8 kinds of waste which has been prescribed by the BRSR core, which comes from the Pollution Control Board norms, obviously. So there are 8 kinds of waste against which the entity has to report the amount of waste generated from operations. Mind you, waste is different from the post-consumer waste. That is, you use a shampoo bottle and throw it in the dustbin. That is post-consumer waste. That waste does not come here. That waste comes in Principle 2 disclosure. The waste, what we're talking about is the waste generated in the manufacturing of this shampoo bottle. So that waste intensity, that is waste generated by the revenue in rupees, the revenue in US dollars, and revenue for physical quantity, waste recycled and waste disposed. The waste recycled and waste disposed has to be given, the quantity has to be given for each of these 8 waste categories. How does it happen? Okay, listen to it as a story. Now, the company has operations. So it generates process waste during its operations. A lot of it, like let's say a steel company, a lot of it goes to an internal recycling facility for company operations like melting or other operations. Now there are certain other kinds of waste, which are plastic waste, e-waste, which has got no use for the company. What happens with these? They are collected and segregated. Collected at one place and segregated. Segregated into what? Segregated into recyclable waste and unrecyclable waste. Now the recyclable waste is sent to the authorized waste recyclers. Authorized by whom? Authorized by the State Pollution Control Board. And the unrecyclable waste is sent to the authorized end-of-life processors, authorized again by the State Pollution Control Board. Now both of these process the waste either by recycling it or by end of life, that is incineration, or putting it in the landfill, or making roads out of it, or cement, clinker manufacturing for cement. So what these authorized waste recyclers and end-life processors do is they generate certificates, which will be given to the company, which can be shown that the company has recycled and disposed of this much quantity of waste under each category. Now there are specialized organizations called Producers Responsibility Organization, or PROs, who help the organizations in this aspect, the dotted line, which is collection, segregation, liaisoning with the authorized recyclers and the end-of-life processors. Some of the examples could be Recycle and Banyan Nation. Now these PROs also manage the pollution control regulations, compliance reporting, and the documentation for the company. It is catching up in India. It is much prevalent in the West as of now. Now, we have completed the environmental KPIs, and we are 30 minutes into the presentation, which is good. Now we have 3 social factors which need to be reported, which is not very technical like the environmental cases. So this should be easier for us to understand. So the first KPI is spending on well-being measures as a percentage of revenue. So what is spending on well-being measures? There was a lot of diversion in the figures reported for the financial year 23-24. Now the Industry Standard Forum has come up with a specific definition of what is spending on well-being measures. And the second point is safety-related incidents, fatalities, and permanent disabilities. Let's see. So regarding the well-being, expenditure on well-being. So only these expenditures, specific expenditures, should be taken into account. What are they? The expenditure on health insurance. The expenditure on health insurance, accident insurance, and daycare facilities. Cost of maternity and paternity benefits, which is direct benefits to any pregnant woman. That is, a cab is provided for dropping at home and picking up, or an actual salary paid to the employees during their parental leave, either to men or women. That is also there. And the costs incurred by the employee in health and safety measures, which is medical benefits provided, health checkup camps, eye treatment camps, counselors, clinics, fitness programs, company pays for the employees' fitness program registrations. Mind you, it also includes mental health, not just physical health. So expenditure on these 3 heads should only be considered for this. That is a big clarity which has been brought out. Second is safety related incidents. There is a metric called lost time injury frequency rate, which is used to measure the workplace safety. This has to be maintained by the safety officer of the company. So basically the absenteeism of an employee because of an accident at workplace has to be recorded now. So the total number of lost time injuries in hours into 1 million divided by the total number of working hours for all the employees. That is a metric which is to be used. So obviously LTIFR for a high risk industry like a steel plant or a mining or oil and gas would be higher than a low risk industry like a bank or a stockbroker. Then again, the number of permanent disabilities and the number of fatalities, this I think the companies would keep record, or the factory inspector also. This has to be maintained and reported under this parameter. I'll just... Gender diversity in business. How well are we taking care of our women who are working for us? So wages paid to the female employees as a percentage of total wages paid to all the employees, and disclosures regarding complaints on Prevention of Sexual Harassment, Prevention, Prohibition and Redressal Act 2013, or basically known as the POSH Act. Now, what the industry standard note has done is it has defined what is wages. The earlier BRSR, the guidance had given this should be included, this should be included, this should be included, which obviously creates confusion. Now, what it has done, it has sort of created a negative list. So definition of wages would be the amount which has been booked under the employee benefits expense in the P&L and exclude the retirement benefits, the ESOPs, and the staff welfare expenses. That is what has to be reported, which is much simpler. And for other than permanent employees, that is women working on contract, etc., the actual wages paid to the non-permanent employees or workers. That is what has to be reported. Again, what has to be reported is the number of complaints which has been received under the POSH as a percentage of the number of female employees. So the confusion was number of female employees during the beginning of the year or the end of the year, what? So the industry standard note says it will be the average of the number of female employees. Again, there still lies a confusion that whether it should be only permanent employees or other than permanent employees should be included. This note does not say, but the POSH Act says that any woman who is working in the industry, in the company, comes under the POSH Act. So obviously it should include both permanent as well as non-permanent employees. I mean, female employees. Now, out of the complaints made under the POSH Act, how many complaints were upheld? That data has to be reported. Now, what is meant by upheld? So when a company implements a POSH Act in its, is implemented, then it forms an internal committee which will scrutinize each and every complaint made under the POSH Act. So it will collect evidence, the video evidence, and it will collect witnesses, etc., before coming to a conclusion. So in such cases where the inquiry report has arrived at the conclusion that the allegation on such and such person has been proved, there is enough evidence to state that he has done sexual harassment, then such cases has to be noted and reported here. That is what is the clarity which has come. The allegation must be proved. Coming to inclusive development, purchases from MSMEs, small producers, and within India as a percentage of total purchases. So within India as a within India should not be a problem. You know the site of all the suppliers. So that as a percentage of total purchases is not a problem. What are small producers? But before that, what is meant by total purchases? The definition of purchase is important here. Input material or total purchases shall include all types of procurement, including raw materials, spares, services, capex also is to be included. And also all forms of services which have been procured from any third party. So that is the first clarity. It includes all kinds of purchases. Right? Now, what is small producer? Small producer means an informal producer or a self-help group, working from home-based workers, who produce some quantity to the company of gift items, etc. Cooperatives, producer companies like Lepakshi, So how much has been procured from them and how much has been procured from MSMEs? So that should be readily available. If the supplier submits an MSME certificate, he is an MSME, and the definition of MSME has been changed from 1st of April 2025. So, but that is not relevant. The supplier has to give us a certificate for MSME. The second is the amount of job creation in smaller towns, which will be reflected by the amount of wages paid in smaller towns as a percentage of total wages paid all over India. Now, what is wages here? Wages here means total wages, which is, employee base expense minus, your retirement, ESOP, etc., plus contractual payments for labor in a specified location, divided by the total wages plus contractual payments for all locations within India. Now, what is specified location? How do you identify what is a small town? What is the basis? The basis is the RBI classification. The RBI classification says that any location having a population of less than 10 lakh will be rural, less than 10,000 would be rural, and more than 10 lakh would be metropolitan. And there are other categories like semi-urban and urban. This seems awkward because it is based on 2011 census and has not been updated. So there could be some challenge here in finding out whether the location is, semi-urban, urban or metropolitan. And mind you, here the location of the job is more important and not the location of the employee. It does not mean that I have recruited from a place called, Raigada in Orissa and put him in Mumbai. No, the job should be in Raigada. That is what is important. Next is fairness engagement with customers and suppliers. The second point is number of days of accounts payable, which is, accounts payable connected to the goods of cost of goods sold and reflected in number of days. We have been doing it in our financial statements. But again, here, the catch is the definition of purchases. The definition of purchases here would be the same as used here in the inclusive development KPI. Next, instances of customer data breaches as a percentage of total data breaches. What is a data breach? Basically, a data breach is a cybersecurity incident, a ransomware or a malware attack, which has to be first. There are two requirements. A, which has to be reported to an organization called CERT-IN and should involve compromise of the personally identifiable information of the customers. These are the two requirements. What is CERT-IN? CERT-IN is a national nodal agency for responding to cybersecurity incidents as and when they occur. So any cybersecurity attack has to be reported, and if it is found that the personally identifiable information of customers has been compromised, then the same has to be reported here. What is personally identifiable information? Passwords, the health records, the sexual orientation, financial information, biometric data, etc. This is what has been defined as personal information. The last one, openness of business. How open is the business in its transactions? So concentration of purchases and sales with trading houses, dealers, and related parties. And the share of related party transactions in purchases, sales, loans and advances given, and investments made. So purchases from trading houses as a percentage of total purchases. Again, the purchase definition is including capex. So trading houses is defined as, legal entities involved in export, import, domestic trade of goods and services. So the challenge here is all your suppliers have to be identified whether or not they form this definition of trading house. The categories have to be made. Then once it has been done, the number of trading houses where the purchases are made from, how many trading houses are you involved with? That has to be reported. And the percentage of purchases from the top 10 trading houses as a percentage of all trading houses. So how much concentrated is your purchases from the trading houses? So if you're making your entire 90% of your purchases from 3 trading houses, it means it's highly concentrated and it is not very open. Similarly, for sales side, how many dealers or distributors are you dealing with? Then, and the percentage of sales to the top 10 dealers compared to the total sales to all the dealers and distributors. That has to be reported. Related party transactions. Now, SEBI was looking at related party transactions of the listed entities with a magnifying glass. Now, the related party transactions of the value chain partners of listed entities will also be scrutinized. So the purchases with related parties transactions as a percentage of total purchases, sales to related parties as a percentage of total sales, loans and advances standing in the books of accounts given to related parties as a percentage of total loans and advances, and investments made in related parties as a percentage of total investments, which is lying in the books of accounts as on the last year of the financial year. Who is a related party? It is as per regulation 2 of the LODR regulation. The same thing applies here also. Now, I think we have come to the end of disclosure, the theory part. Now, what about the practicality? So there will be many companies who would be starting their, the BRSR core framework reporting journey in 2025-26. So what is it that they need to gear up for? Number one, gain the understanding of JG protocol. It's a beautiful standard. List the purchases according to suppliers and categorize them under trading houses, related parties, MSMEs, small producers. All the suppliers have to have these categories. List the sales for dealers, distributors, etc. Implement the POSH Act in your organization. Create a policy and procedures. Track the injury-related absenteeism for LTIFR data. Prepare the employee data according to the gender. Obviously, that is there. Wages paid with the industry standard definition and location of the job. This is very important. Develop internal procedures for collecting quantity data, that is fuel consumed, quantity of electricity consumed, quantity of water consumed, etc. Liaising with waste recyclers and end-of-life processors to get the waste-generated data. The best is to appoint a PRO. And implement a cybersecurity policy. And report any cybersecurity attack to CERT-In first, as per the guidelines. Start doing this. So this is the gearing up which is required. So it is 46 minutes. I am done with my presentation, but I have a small quiz which all of us will take. There are only 6 multiple choice questions based on whatever we have discussed in the last 45 minutes. I'll give you 1 minute to answer the questions. Take out a piece of paper and scribble down the options, or you can use a notepad, anything. So I cannot see you, so I hope you're ready for the quiz. This is the quiz and your time starts now. I hope the running. Sorry. Hello, Atishay.
Yes, sir.
I am not able to see the clock, so you have to tell me when the 1 minute is over.
Oh, okay. Yeah. Time stops now.
Right. So value chain partners of top 250 listed entities shall report on the BRSR core KPIs in their annual reports from financial year 25-26. It is false. The reporting will not be done by the value chain partners in their annual reports. It will be done by the listed entities in their annual reports. Which one of these should be the source of purchasing power parity adjusted exchange rate, IMF? Wages of daycare staff should be a part of staff welfare measures. Yes, because it is a part of the maintenance of daycare facilities, which is a part of the spending measures. A Limited has 90% of its purchases from top 10 traders. B Limited has 43%. Which one is more open? Obviously, B Limited is more open because it is more inclusive, to its suppliers. Now, this is an interesting question. A Limited sources 1,000 kilowatts of electricity from captive coal based power plant. Emission rate is 0.727. What is the emission to be reported under scope 2? The answer is 0 because it is a captive coal power plant, and so the emission would be reported under scope 1. Ease of doing business circulars mandates the assessment of BRSR core KPIs. No, it does not. Entities may opt for assurance to meet other stakeholder requirements. Thank you. Thank you if you've taken the quiz.
Thank you, Pawan sir. I think there are some queries from some of our participants as well. I'm sure that you would like to take them up. So, sir, one question is from Patna. What is the principle 4 of BRSR?
Principle 4 of BRSR is about the stakeholder engagement, how the companies engage with the stakeholders. That is, how regularly do they do it, and in what manner do they do it? Emails or meetings. That is what is about stakeholder, but that does not form part of the BRSR core.
Okay, and there is one more question which has been asked by C. Abhimanyu. So, sir, please tell us whether all top 1,000 listed entities need to report KPI of BRSR core of all its suppliers and customers in its annual report of 25-26, or whether it is mandatory reporting BRSR core parameters of customers and suppliers in year 24-25.
No. The ease of doing measures has shifted the compliance to 25-26, and only the top 250 companies will be doing it in 25-26. So it is a glide path. So 500 in 26-27 and 1,000 in 28-29.
Okay. That's all from my side, sir. It was a pleasure having you on board, and it was a really informative session on BRSR. And anything else? If
Yeah. Okay. Thank you. Thank you so much.
Thank you, sir. So for our next session, we have with us CA Meenal Sambre, which she has more than 20 years of experience with Masters in Commerce, combining technical expertise with strategic financial leadership, underwriting over £1 billion in debt across acquisition finance, syndications, property finance, and SME funding. She is deeply committed to mentoring and empowering women in financial inclusion, leadership, and entrepreneurship. And she has also been honored with Diversity Champion Gold Award in 2023 by the London Chamber of Commerce, and has been recognized as an Iconic Woman of the Year in 2023 by Women Economic Forum of London. Please welcome CA Meenal Samre.
Hello, everyone. Good to be here. And hi. Do you want me to speak about?
Also, I want to introduce our speaker, CA Sumit Bhatia. So he's also with us today from London, and he has over 13 years of experience in audit, compliance, and financial advisory. He has also expertise in strengthening internal controls and aligning financial processes with global regulatory standards. He has also spent nearly a decade with Big Four firms specializing in external audit, financial convergence, and SOX advisory. Welcome, Sumit sir.
Thanks, Atish, and thanks everyone for giving me an opportunity to be part of this session. So I'm glad to be here.
So I think CA Meenal ma'am will start the session first, then we'll take it forward for Sumit sir. Is it like that?
Yeah, I think just someone who is driving the presentation. Shall we?
I think ma'am, you have to share the screen.
Shall I share this? I can share the screen.
Yeah, you
and
can.
then I think we will distribute among ourselves. Can we both have rights to navigate together? Is it? Yeah, I think so.
I think.
Can everyone see the screen?
Yes, ma'am, it is visible. We can
Okay,
go ahead and start the session. Yeah.
thank you so much. So, good evening, everyone. Actually, good afternoon for people in India, and probably good morning from other continents. And me and Sumit are based in London for quite some time, at least a decade. Like I've been here in UK for 20 years, and I think Sumit has been for more than 10 years, as much as I know. So I run my own financial services company in UK, and I have a background of working into acquisition finance with corporate and investment banks. And I will leave for Sumit to introduce himself. And more than that, I think we will pick up on our screen one by one. Sumit, can you navigate? You can tell me when to navigate to the screen, and I will leave it to you to start.
Sure, Minal. Sure, Minal. And thanks for the brief intro, Atisha and Minal. Just to add to uh, what I have told earlier. So yeah, it's been not a decade, but almost like 6 years. So I came to the UK in 2019 as a manager in EY UK, was part of their capital markets team, and then gradually developed the experience over SOX advisory, along with raising debts from the capital market, basically in US and UK markets. And then I have helped a lot of companies to go for US IPO, where I was involved as part of the manager, and then rose to the rank of senior manager in EY. In 2023, then I got an opportunity to move one company. It's an oil and gas company. It's Borderling. And here it's been now a couple of years. I am handling their overall SOX compliance. So basically, I'm working as senior manager, internal control. Meanwhile, if you can switch to our intro slide, I can
I
just
think
cover the intro.
okay, wait. I think I have to switch from. How do I switch it? Oh, sorry. Yeah, here
Yeah,
it is.
this one. So here I do have my brief intro, but just to give you some high level of my background here. So currently, from past 2 years, after having a decade of experience in consultancy, I am working with Borr Drilling, which is an offshore oil drilling company, and it's has their offices based in various geographies in Middle East, Asia, Mexico, Philippines. So I'm basically responsible for their overall SOX compliance. I'll be covering in detail in this slide basically the opportunities that chartered accountants from India can have when they're moving to the UK markets, specifically in cities like London, Birmingham, or Manchester, where they have a lot of opportunities. But before jumping to that, let's briefly go through the agenda. Then I will pass on to Meenal for one slide, and then I will take over in detail for the UK job markets. So in today's session, we'll be covering like, okay, why UK would be your target market if you are an Indian chartered accountant and looking to move in UK, specifically in cities like London or any other city in UK. Then I'll also be covering the relevant sectors for chartered accountant in UK. We'll be going through some in-demand roles at the moment that we have seen across all the industries, and what are the key skills required for CAs, type of work visa, and UK residency. So here I'll be covering what type of visa would be required when you have to move to the UK, and how you can convert your work visa to UK residency, and then some ties between India Chartered Accountancy body and UK ICAEW body. And then Meenal will be covering on various investment opportunities for chartered accountant and obviously for their clients in UK businesses and also in the real estates. Then she has some couple of case studies to go through, and at the end, obviously, we'll be covering or taking some questions. So, Meenal, yeah, you can take through the next
So
slide.
I think, yeah, the first slide is why UK. So UK still remains as a one of the favorite destination for the Indians to come and invest and work and study in UK. So I would take very high level bullet points. Why? Because UK still remains as the sixth largest economy in the world, and that is a big attraction. Then the corporate governance, UK is abided by high level of corporate governance, be it Money Laundering Act, Terrorism Act, or Crime Proceeds Act, or company law, or or FEMA or like kind of foreign currency and all. We are in UK, we are highly committed to COP21 as well as SDG goals. So there are plans to get onto net zero by 2050, go diesel free by 2030, and be green by 2030, like partly by 2030 and 2050. So there are several opportunities to come to UK market, be ahead in everything in terms of technology, green initiative, or financial services initiatives as well. Then we are talking about a large Indian diaspora in UK. So yeah, it's one of the main attraction. It can sound like a minor one, but it is like if you go to other countries where there is no Indian diaspora, no tolerance for the culture, no recognitions for your religious values. So that takes over in UK. Then you also have like the 4 out of top 10 world's universities are sitting in UK. So it remains a hub for students to come work here. That also leads it to become the research and innovation hub. So many patents and researches are coming out of the universities, top universities from UK, and they are then supplied to the world. Then you have investment opportunities in healthcare, in education, in businesses and real estate, the big ones. And so yeah, UK remains one of the attractive place to invest and work and stay. Then we have FTA, foreign trade agreement signed with India, so which leads to Indians in UK coming to UK. It gives a leverage over other countries where there is no direct investment agreements are signed up. So there are ways to do it. More than that, when you are in UK is considered as a hub to enter into European market. Lot of manufacturing industries set up their quality testing platforms here in UK. So you do build a product in UK, like you build a product somewhere else in the world, you build it to you, bring it to UK, do the quality testing, and then get it approved with the European standards or American standards, and then you can export it from here. So that's all from me here for now. I will leave it to Sumit to take over to the next slide.
Sure, Vinod. Thanks. So moving to the next slide, if you can move to the next slide.
Yeah, key industries for CAs and jobs.
Yeah, so here I'll be covering, like if you're an Indian chartered accountant and you're looking for opportunities in UK, what would be your key industries where you can apply? And as you know, like all of these companies have their LinkedIn page. So if you are targeting to apply for any company based in UK, I would say your first option should be LinkedIn, because right now in UK, what I observed, companies post their regular openings on LinkedIn page. So you don't need to worry about going to any other platform. Your LinkedIn would be your one-stop solution for applying all the jobs. But I've listed down here some key industries, or like banking and financial services, especially here includes all the banks like HSBC, Barclays, NatWest, Citibank. They also have a lot of opportunities. Recently, I've came across some of the opportunities posted by Citibank on their page, mainly on LinkedIn, where they need some chartered accountant who have experience in AI and also in digital transformation, because a lot of these banks, because of the security reasons, as well as due to the new AI security concern, they will be require resources who are experienced in digital transformation. Then obviously we do have consulting and advisory firms in UK. All the big fours are there, and also there are top 20 other firms who need chartered accountants. They basically look for people who have audit experience or who have experience in internal control. So that's also could be your another industry where you can target if you're applying for opportunities in UK. Then there are a lot of fintech and startups, and some of the fintech I have mentioned here, it's like one of the major e-commerce bank here, Monzo, and other is Wise. It was TransferWise earlier. Basically, with Wise, you can transfer your money from UK to India, or your India to UK. They got listed last year in US, and they have expanded exponentially during last 2 years and growing so well. One of the other startup now, their plan is to go for US listing next year is Revolut. They recently filed their paper to SEC, Securities and Exchange Commission in US. Because when you are going for a US market, you have to publish your draft prospectus and also your security statement to this SEC, that is one of the body in US. So these are your major fintech that you can target. Also, there are a lot of MNCs and corporate firms as well, like British Petroleum, BP, Shell, GlaxoSmithKline. So all of these require people who have experience in finance, in corporate roles, or internal controls, or even if you have experience in, let's say, in any transformation, or if you are working in a company as a finance manager, then also they require a lot of people to do their bookkeeping and accounting. The other role is risk compliance internal audit. That is where I sit. Here I have listed few firms like CFGI. It's a US-based firm now expanding in UK and in European market, and they're hiring a lot. So you can go to their webpage and can see what are the opportunities that are available in the UK market. And also, I do know that they are sponsoring for visa. So that's another concern when you have to apply for UK opportunities, that you have to make sure that you are applying to a job where you can get sponsorship. So, but I do know these two companies are sponsoring visa, so that's where you can apply for. And there are a lot of other UK government body like HMRC, NHS. It's not like they don't hire resources from people who are outside UK. They do hire resources outside UK. There are a lot of doctors who come to NHS on a sponsorship. Same for HMRC, who's like a body that handles all their taxes, be it direct taxes, be it indirect taxes, or any kind of compliances. So they also hire a lot of people from outside UK, especially from markets like India and Southeast Asia. We're moving to the next slide.
Yeah. Okay.
Uh, can we make it bigger? If you can click on that. Yeah, that's better. Thank you. The next is in-demand roles for CA. As I mentioned about the key industries. So what kind of role are they looking for? So one of the key role, and I've seen a lot of people in my network who came here to UK on a external auditor visa. So there are a lot of openings for external auditor, basically for the stat audits, where all the big four, usually PwC, KPMG, EY, they sponsors visa. And I think that would be your starting point if you're targeting for UK market, to see like, okay, what are your positions, open positions in these big four, and whether you can apply for that. But apart from that, you can also do a search in ChatGPT or on Google to see, okay, what are my other top 20 firms in UK that sponsors visa. There are some like Crow. There's other firms like CFGIs, which I just mentioned in my last slide. So you have to see all the options and keep all the options open. Apply for those roles, and I'm sure like some of them definitely turn around and say like, okay, your your resume does match to the profile, so we would like to go for the interview. Then the second key demand role in UK is internal auditor risk manager. So where I am sitting right now. So I'm working with Borderling as a senior manager in internal control. So I basically started with stat audits, and then I learn about SOX, basically internal controls, and then gradually move to the risk and governance profile. So where I test different controls, I advise various clients on how to do the risk assessment to assess their control gaps. So that's part of what you do in risk manager. Then there are various roles for finance, especially in financial controller and finance director. If you experience of 3 to 5 years in accounting and bookkeeping, a lot of companies hire for this role. And definitely for the tax consultants, there are a lot of opportunities in Big Four where you can apply as an advisor, or if you're experienced in transfer pricing. I do know some of my friends who have came here, especially on transfer pricing profile. So yeah, it's kind of a hot profile right now. So you can look for options if you are a tax person. And then there are a lot of opportunities because UK is a like investment banker hub, especially it has banks like JP Morgan, Citi, HSBC, where there are a lot of profiles for investment banker. So that's another option which you can see and apply online. And if you are from IT background, have CISA certification, or if you are somewhere who loves IT, then there are a lot of jobs on digital transformation at this point of time where you can be part of the company to help them. Basically, this company needs people from the finance background who can help them in navigating from finance to the IT so that they can implement those SAP and ERP based tools. Moving to the next one. Yeah, so here I'll be covering, so you do know what are your key industries, what are the roles that are in demand, but how can you apply? What are the visa requirements? Just want to give a disclaimer, we are no immigration consultants. So what I am explaining you here is more about what I know so far, so my journey and what is available over online. So one of the key route to come to the UK market is your skilled worker visa. So how can you come on a skilled worker visa? To come on a skilled worker visa, and that's the visa route that I took when I came to UK back in 2019. So you have to find a right job that matches to your skill. Then you need to find the employer who is a licensed sponsor, who can sponsor you, can issue you a certificate of sponsorship. And then if your profile matches to the role that you're applying for and your employer is ready to sponsor you, then you can apply for that role. And then it will give you, sometimes they give you 3-year skilled worker visa, or sometimes they give you a 5-year skilled worker visa. But there is a certain minimum threshold, and it was revised recently. It was £38,000 up till last year, and recently in July, they have rose that the minimum salary that they should offer should be 41,000 GBP. Which is I would say a handsome amount if you're a single person going to reside in UK, you'd be able to survive. And then there was another visa that recently launched by Indian government. It is a young professional scheme. It was like a ballot, same like when you go for US, you have to go for H-1B visa, which is like a ballot visa. They have launched this visa especially for the youths who have recently graduated or who have recently qualified in any professional exam. It's a lottery based, and the volume of the visa is not more than 3,000, so it's purely on random basis on draw of lots. And if you are in an age group of 18 to 30, then you can apply for this visa and it will be valid for 2 years. So this will be a good opportunity to enter to the UK market, and before your visa expiry, you can find another sponsorship, another sponsored employer to switch your job, and you can still continue your job within UK. The other type of visa is graduate visa. So for graduate visa, these visas are basically offered to the students who come to the UK market, who completes 1-year or 2-year course. And after your course, you get opportunity to work in the country for 2 years. Recently, it's changed to 18 months, but you will get 18 months to work for any employer without sponsorship. But within those 18 months, before your visa expiry, you need to find another sponsor so that you can continue working in the UK market. So what happens when you have completed your tenure on skilled worker visa for 3 or 5 years? So after that, what you need to do, like any other country, you have to apply for citizenship. So in UK, the principle is once you have completed your 5 years on skilled worker visa, then you can apply for indefinite leave to remain. So after getting indefinite leave to remain, you won't require any other license sponsor. You can continue and switch as much as employee you want. So that gives you a freedom to switch your job without finding a sponsored employer. And basically, after 5 years, you get your ILR, and after a year of ILR, you can apply for your citizenship here in UK.
Okay.
Moving to the next one. So here, just on a high level, I am basically explaining what are the ties between UK and ICI, basically in India. So I'm not sure if you already know, but there's a pathway that is a MOU signed between ICI and UK ICAEW body, which is like UK Chartered Accountant. So if you are a ICI member with at least 5 years of experience, then you can apply for this pathway where you need to do some case studies. I think there are 4 to 5 case studies, and they will assess you on that case studies. If you pass, then you will get ICIAEW membership. So that opened more options for you to apply for various other opportunities in UK market. Then also we have our ICI UK chapter, which Meenal is already part of. She's a sitting member in ICI UK chapter. I was an ex-committee member. And there's a like group of 600 chartered accountants in this chapter. So you can network to those people and reach out to them to see like if there are any opportunities in their companies, because those 600 people, I'm sure half of them would know if there are opportunity in their company. So that's like a good way to reach out to find opportunities that you can apply for. And I'm sure you must have recently heard there's a free trade agreement signed between India and UK, and that was a statement from our president, Nandaji. And he said like there will be a lot of opportunities that will be open for chartered accountants in the UK market, and that's because there are a lot of tariff reduction that happen within within these FTA agreement, and that led to a demand of, I'm sure, because I was reading one article recently, it says that there would be a demand of 300,000 to 400,000 in the near future, in the next 5 years. So definitely there going to be a lot of demand for finance professional in the UK market in the upcoming years. I've also included some recruiter links in the slide at the end of this presentation in the appendix as a useful link, which you can refer to apply for UK roles. From here, I will pass on to Meenal so that she can cover her slides.
We can't hear you, Meena ma'am. I think Meena ma'am has lost the connection. She might be able to rejoin.
Sure, Meenal. Meanwhile, I can just take the people to one of the useful link that I have in this slide. Sorry, who is having the control over the slide? Is that you, Meenal?
I think it was Meena ma'am only. So
Okay.
if you can share your screen, that will be like, if you have the same PPT, you can share the screen.
Yeah, sure. Let me know when you can see my screen.
Yes, we can see the screen. Can maybe the full screen, please. Yeah.
Yeah. So what I was referring to is some links at the end. So these are the top 5 recruiter firms here based in UK, which you can follow on LinkedIn, and they regularly post openings in the UK market, specifically in cities like London and Birmingham. And there were a lot of jobs for chartered accountants, specifically in the area of stat audits and also in the area of internal control. So make sure you follow and apply for those opportunities that are there on the LinkedIn.
In the meanwhile, where Meenal ma'am is joining, there are a few queries which we can discuss. Someone has asked the question, with core SOX advisory experience, what sectors would have openings?
Sorry, what kind of experience they have? Code X?
SOX advisory experience.
Okay. So for SOX advisory, one of the opportunities that you can apply for is basically in Big Four, because in Big Four there is a team of risk advisory where they do need a lot of people, because SOX is an act that applies to a company who are US listed. So you can target for all the companies that are US listed. They need a person in their company who can test those controls, and that can be only happen with a person who has SOX experience. So I would say target those companies, like I mentioned in one of my slides, Revolut, who is going for US IPO next year. So you can see, okay, definitely they will need people for SOX advisory, so apply for that. Other firms are like Protiviti and then CFGI. They're all a risk advisory firm that need people for those experience, so you can apply. We still can't hear you, Meenal.
We can't hear you. I think, can you join again, please?
Okay, can you hear me
Yeah,
now?
now we can hear you. Yeah.
Okay, fine. So I'll let you navigate the slides, Sumit. Thank you for that. And apologies for the disruption. I think the Bluetooth played around with another device on my desk. So it got connected with another device and then it left the link. Anyways, we're back to the presentation, and thank you for this opportunity. So I am going to present today about the like I talked about why UK, why people should come to UK either for work, for living, or for doing any business, or maybe creating your source of wealth, one of the source of wealth in UK. Now I thought my route is slightly non-traditional. Like I'm not talking too much technical points here. I am talking about how do you migrate to UK and set up a source of wealth or source of additional income in UK. And for that, I would be covering how can you remit the money to UK, living within RBI's parameters, as well as what UK demands in terms of bringing money to UK. Also, I will touch base on the structures which are kind of well-known structures. I do not have enough time today to go into the detailed and the legal complications of those things. We'll be just touching base. And in from my point of view, I have like several sectors I can talk about, which I are attractive to invest in UK. But I've got a couple of examples on hospitality, which is like hotel industry and franchisee business. So I've picked up one from the medium investment, like 5 million. The other one I've picked for the lower like investment up to 1 million, and then you can go up to investment up to 50, 100, 200. So there is no upper cap on how you want to invest. So we can move on to next slide. Sumit, can you help me, please? Yeah, so these are the sectors which I said. So this is for because we all are some or other way, we are the backbone of the financial system in India, and nowadays abroad as well. Like so many of CFOs are Indian chartered accountants, and I think one of the most recent one being Tesla. So we know the finance, and we know the how we can diversify in other places. Today, I'm talking about a kind of SME scale, where the people with 10 or 15 or 20 million can look at. Not, I'm not talking the wealthy part of it. So I've listed out several options. So there are several opportunities in UK to invest. And then care home it's a terminology hopefully used worldwide, is the place where elderly in UK, especially in West culture, come and live, and they spend their last years, and there is no one to look after them. Then hotels and hospitality, we are all aware of. Residential real estate, I'm talking about student accommodation or blocks of flats, and some of the development part as well. You buy a land and you get a planning permission and build flats, offices, garages, parks. And then SME businesses, these can be businesses, manufacturing businesses, or kind of, import and export trading. I've seen quite a few import and export business. A lot of jewelry businesses are coming into UK these days because they do recognize the value of demand of gold done in a certain way, and the Indian jewelry is in high demand. Like a lot of big names. I think one from the south, two or three from the south have actually launched their retail stores in the UK. And then franchisees like likes of McDonald's, we all know, we have seen the growth of McDonald's, Starbucks in India. So we know franchisees, how effective these are and how much money you make out of it. So franchisee, we're talking about McDonald's, Starbucks here as well, Subway, Pizza Hut, Indian franchisees like of Chennai Dosa, Sarvana Bhavan. Now it's Notes is another Indian franchisee. Then couple of Shri Krishna Vada Pav is the Indian franchisee as well. Education and tutoring is one of the upcoming in UK because this country hasn't been in the tutoring space. So a lot of Indians have started tutoring. It's big. It's getting big. Like they can open the coaching centers and they can make few millions easily. I know some of them. Student accommodation is another. You PG. In India we call it paying guest facility. You build a block, let out the rooms to students. There are restrictions on if you are building it under the sector of student accommodation. There are restrictions what you can do, what you can't do. Tech startups, there are a lot of promotional activities going on for tech startups because this is kind of fourth and fifth industrial revolution. So UK has been on the forefront of promoting tech startups. There are a lot of government incentives coming to these tech startups. There are a lot of grants being brought to these startups. There are a lot of tax advantages for the individuals who are investing, which is called EIS and SEIS schemes. Renewable energy, again, there are a lot of grants and subsidies sitting both for the buyer, investor, seller, consumer. Logistic parks and warehouses, this is a well-known like investable sector. Then property conversion is, I talked about it. P2P lending is one of my space because I have my own financial services company. So there are a lot of alternative funds coming in for the P2P lending. This is because of the restrictions or regulatory landscape for the bigger banks. What they can't do, the smaller players come into the market and they have really, really captured the market very, very well. So each of this is, I would say, at least 15, 20 billion sterling pound industry. And the yield, I would say minimum 10%. And then for the yield, for 10% yield, I have not counted capital growth. I'm talking about only income yield. We can spend hours and hours doing it, but I'm leaving it here right now. And we can move it to the next slide, please, Sumit. So ODI, I trust based that. So one thing, if you're investing in UK, so there are two things you need to look into. You have investable sector. You have identified an investment opportunity. Then how are you going to fund it? Then there is always a demand of equity and debt contribution to all the investments you make. So, but if people are sitting only in India, they have probably they have access to money in India, but they don't then we have to figure it out, how do we remit it to UK and invest. So RBI permits, there are two well-known routes, which is overseas direct investments and liberalized remittance scheme, LRS. And so who does ODI applies for? It's for the Indians living in India, and they want to invest, send the money abroad for any reason. There can be a number of reasons. How do you bring? What are the permittable routes? How do you invest? You can invest via an LLP. You can invest by a limited company. You can invest by a partnership. You can invest by a trust. But trust, there are restrictions on how you can trust. What you can purchase out of this money. You can purchase in shares. You can purchase a debenture. What you call debenture is convertible in UK. Then you can do a guarantee. The parent company can guarantee to the UK company. So there are like most of the well-known permissible route are allowed. There are then there are two things called automatic route and approval route. Automatic route is the one where you are ticking all the boxes. You have RBI said you can do this. If you have met these 3 or 4 requirements, you can send the money up to this amount abroad, and then this is called automatic route. And then there are approval route. When you have not ticked all the boxes, then you have to go to RBI to get the approval. And I think I can move to the next slide, please. So again, on the just at the forefront of it, I want to talk about the process, very high level process. So for the automatic route, you don't do anything. You send the money, and obviously your bank the you are using, they will ask certain forms, certain declaration, and then you send the money, but within 30 days you have to fulfill certain forms and submit it to RBI, and your accountant, your tax advisor will guide into that. And then there are for the approval route, then you have like certain requirements to fill the proposal form and everything. You have to detail why you want to do it and why you are the right person to do it, and then you have to do all that process in advance. Then we are talking about, so then further, the automatic route divides into two routes. One is the non-financial sector. If you are sending money abroad to invest into a sector which is not financial services are classified as banks, asset management companies, or money management companies, or insurance companies, pension funds. And so for non-financial services company, it is very easy. You can create a pool of money, and the only restriction which RBI places is that you should not the money should be you cannot send money more than 400% of the net worth of the net worth. And net worth, I think, being chartered accountants, we know what is net worth is your equity, your securities value, and your premium account is added to your net worth. And then you don't need to prove any existing profitability. You don't need to prove any existing experience in that sector. And but what you can't do, you can't invest into gambling. You can't invest into trading of the shares. You can't invest into defense area. So there are certain sensitive sector where RBI doesn't permit you to invest. We can go to the next slide. Then financial services is, again, you have a 400% cap on the net worth, but you have to have an existing player in India in financial service. So whatever you're doing, if you're an insurance company, you should have that kind of insurance experience in India, and then you can remit the money. If you're a bank, you are trying to open a financial services company in UK, you have to have that kind of experience. Your last 3 years audited account should be profitable, and also uh, uh, and so yeah, again, similar restrictions for not doing trading and not doing prohibited sector as well. So we can move on to the next slide. So I tried to put some example, and I think I'll move away with these examples. These are very simple examples. I want to do different examples, and this couldn't be put in the slide. So what they do for the ODI, like there is a 400% cap on the net worth. So what they do, like three or four companies come together and make a limited company, make an LLP or a partnership. So that way you increase your bandwidth of sending money abroad. So the example of here is like 10 manufacturing company can come together with 50 lakhs rupees each, and they can invest almost 5 crore in UK, and they can and it's always 65 and 35 is a standard rule with terms of debt and equity. And then you can also do hybrid. You can also do hybrid where I think we can move on to LRS, Sumit. Yeah. Next one. Yeah, yeah. So LRS is another where individuals can send the money abroad, which is I can send, like if I am an Indian resident and Indian taxpayer, then I can send money up to 250,000 US dollar. No questions asked. You can remit it anytime. There are TCS implications which you can claim back by filing the right form or by making the right kind of declaration in advance. And then again, the individuals cannot send money abroad to for investing into financial services businesses or any debt overload businesses, because then there is a pros and cons that you are trying to write off the debt and bring it to your parent company to write off the debt. And but people can use a hybrid scheme. I can create an LLP where my LLP invests up to 400% of my net worth, and then I can also send 250,000 on my own, and four of my family members can also send. So that way they can increase the bandwidth of sending money abroad. There are a lot of examples where doctors have come together and invested, bought a small nursing home in UK. There are real estate investors in UK. They have pooled the money together and bought student accommodation in UK, or a hotel is one of the sought after sought after sector in UK. We can move on. Sumit, can we move on? Hello?
Can you hear me? This is the slide?
Yeah, that's done. Yeah. Oh, right. That's okay. Right. So I talked about number of sectors which are investable, and we can keep on talking about detail. I wanted to put only one case here, two cases here. So we are talking about a hotel investment which is being sold, or you have negotiated a final price of purchasing at 5 million. The normal standard rule is 65-35. You can go a little bit up and down depending on your circumstances. So you borrow 1.75 million, sorry, 3.25 million. You bring money from India by LRS or ODI route up to 1.75 million. And then it can be LLP in India, and partnership or a limited company in India. In UK, it ideally it should be a limited company, but you can decide what your tax status is and how you want to remit the profits and retain the profit. The legal licensing you will require if you are having a food. Generally, there are a lot of bed and breakfast hotels running in UK, and for that you need minimum food licensing required. They don't do alcohol. Most of them prefer not to do alcohol license as well on the bar. And but you may need alcohol license. There might be a hotel which you identified as is not in a good condition. You want to take a planning permission and you want to build it up. So in that case, you will need a planning permission for building into a hotel. Sometimes you buy a property, run down property, and you want to convert into a hotel. In that case, also you will require a planning permission. Planning permission is a mixed sentiment, but before you buy, you will know what kind of local council. Council is like your Nagar Palika in India. You are dealing with, and how difficult and easy they are on the planning permission. Your advisors will guide you on that, and they will help you do the application as well. There are standard people, professional services provider, who will help you with that. We are looking for a 10-year, if you are looking to invest and exit, we are looking at a 10-year investment profile. But you can happily exit in 5 years if you want. We can go into the next slide, please. Yeah. So I've done a P&L for the 5 year. So this is a very, very basic example. We have so 40 bedroom room. If you're buying in central London, it's a no-brainer. It will run. Like I've got several people I know, several clients I know who run hotels in central London, and they are like milking money, to be honest. So if I'm talking about 2 or 3 star hotel, bed and breakfast, so you don't have an overhead of food, restaurant. You're running a small bar, and you can do a in the room service for the breakfast in the morning. That like the takeaway, you just tie up with someone external, and they deliver to their room. Then average daily rate, I have taken it on a lower side. It's £90, but like if you Google, if you go into now today, if you go booking.com, if you try to find something in near Victoria Station or Tower Hill, you will be looking at £150 minimum. Occupancy 70% again on the lower side. 85-90% is the usual occupancy for bed and breakfast. I'm not talking about luxury hotels. That's a different landscape, and those are still profitable. We can talk about it. Food and event, I've added 15%, but sometimes you tie up with Deliveroo's, eateries, and all those, and you make money on that. So total revenue, we are looking across 5 years for roughly 1, 2, 3, 4, 5, 7 million, 6 million revenue, and then you roughly you're looking at 50%, 45% EBITDA after paying your loan interest and everything. That's a given. 45% EBITDA, and then you pay loan interest, and then there are mechanisms you don't pay 19% tax. I have done for my calculation, I have done 19% corporate tax in UK. And then we are looking at your return on capital about 13% in each of my case. It's like lower side right now. So the plan, what you can do, you can talk to your clients who are willing, who have some excess money sitting, who have vision of establishing their businesses abroad, and then there can be a debt which can be raised in UK, and 35, maybe 25% in some cases is equity, and the rest of that is that. Then you can buy a hotel, and then you can build that kind of 13%, 14% yield just on income. Then we have not talked about the capital growth, which is roughly 3 to 4% outside London. In London, it can be higher, probably 5% a year. So another example I put for the franchisee. I have a lot of franchisee clients as well, and it's again. So I will go back a little bit on the hotel investment. So you make the first investment, and it's a known model in India, in UK. You make the first investment, you build up your equity, and second one comes out of it. So you build up your equity, your profit, you retain the profit in the business, and then profit then can be pooled to pooled to buy second hotel and then third hotel. That way people have created a chain of 20, 30 hotels as well. And similar thing applies for the franchisee business. Roughly on average, you are looking at an investment maybe 350 to 400,000, which is like 4 crore rupees. That's on a higher side. You can do slightly cheaper, but because if someone is coming from India for the first time, just it's good to have a better cushion. Again, 35, 65 rule applies here for the visa, for the loan. Then you are looking for 8% loan debt rate, and but here you're not buying any freehold. Most of the franchisees run on the commercial lease, that's called 10-year, 15-year. There are strict rules on franchisees are very conscious who they are giving the license to. McDonald has a serious interview process, and they say no to many for half of the people for giving franchisee. Grax has a strict process. Then you have Subway, you have Pizza Express. But once you get into it, you have proven yourself. Again, you get into. I know people who have started from 100,000 borrowed money from friends and family. They're holding probably 10 or 15 stores of Costa or Subway, and then they have, and each running store is cost about maybe 6 or 700,000 for the sales price, and then you have regular yield of 16%. I have put some financials on this as well. We can quickly run through it. So again, we have taken an average transaction value of £12. It's done for the Costa store. So it's for average transaction value of £12, 250 average 250 customers. Then we have also accounted for the, Deliveroo revenue, Deliveroo commission, all those online. Nowadays, the ratio of online sales has increased than the in-person sales. And then you're looking at payroll about 25%, utility 12%. Then you pay franchisee between 7, 8 to 10%, depending on which franchisee you're dealing with. And then EBITDA, we are looking at EBITDA maybe 20% EBITDA roughly of the entire thing. And then net profit, like this is on the lower side, and the IRR is 50%, which is establishing the fact that you are able to build up this equity to buy your next franchisee. People like to have their franchisee within similar areas so they can managing operations on a franchisee can be very tedious task. I have seen owners themselves keeping time out to, if in case for the staff shortage or anything, but there is another business sitting on the back of it. People open their own recruitment companies to get in staff from India. So there are ways. We Indians are used to of navigating the like making it work for all of us. So I think that's all from me. What's the next slide, Sumit?
I think it's about questions, sir. I'm not sure
Questions,
if
yeah.
we have any. I think, sure, if you can check.
Yeah, there are a few questions which are lined up for us. First of all, there is one question: how can a US CPA provide services in the UK?
So lot of basically Big Four who have practices established in UK, they have US based client. So even if you are a US CPA, you can still apply for external auditor role or even for the risk management or risk advisor role, because they do consider those people who are US CPA because they have experience about the US regulations and laws, and they prefer for their US based client to have those firms, because there are some firms in UK who have been outsource work from the US firm. So there are a lot of opportunities for them too.
And then, what are the websites through which an experienced CA can apply for a job in UK? What are the comfortable salary in UK for CA with family residence? And any recruiters so that person can apply for a job? And what is the job security in the UK?
Regarding the links, I've already given those links in one of my slide as useful link. Obviously, you guys can take a picture or see the slide later on. About an average salary, I would say for a family of three, if both couples are working, if you are drawing both of you 50,000 each, 100,000 in UK, especially in London, because London cost of living is a bit expensive, so you can spend I would say a good life here in UK. Regarding conversion of your visa into ILR, you have to be with one employer for at least 5 years, or even if you are switching your employer, you need another sponsor. So your job security, I would say it's stable, but you have to stick to one employer so that you don't lose your visa as long as you haven't got your citizenship.
I think the clock triggers back. I'm probably new, like I've done my visa a while ago, like the membership, but I think the clock triggers back if you are moving the employer, isn't it? Clock
No, if you're
resets.
no. If you are on skilled worker visa, it won't reset. But if you are on inter-transit visa, so that's a ICT visa, they call it, then the clock resets.
So the next question is whether CPA Ireland can practice in UK.
For that, you have to obtain ICAEW UK membership, and also you have to pass one of the exam they call RI exam. Then you will be able to practice then you get the right to sign the balance sheets.
And there's one more question: whether Indian CA is required to acquire any additional qualification to work in the UK?
I would say there are a couple of global qualifications. One of them is CPA, another is CIA, Certified Internal Auditor. Also, there are CFA, Certified Fraud Examiner, CFE, sorry, CFE. So there are a lot of global profile that you can develop those skills, obtain those degrees, and definitely that will help you to get an edge over the people who are based locally.
Okay. And someone has asked that how to start a business in the UK with a fund of rupees 1 lakh. Fund constraints are there, but please tell a procedure to start with an enterprise in UK with repatriate basis. Also tell which business would be profitable in UK to start with. Is there a minimum fund requirement to start a business in the UK?
So I had given a slide. What are the businesses you can look into? For someone like 100,000 is 1 lakh is how much? Is 10,000?
Yeah.
10,000 pounds, right? 10,000. I think for a franchisee, you need, if you're like the smallest, the lowest cost one is the franchisee business, but you need at least, like even if you are going for a rundown franchisee and if you want to revive it, you need at least 100,000, which is 1 crore rupees. And
Right.
then we can borrow the money, we can take some local help who can come and become your, part shareholder, so that their experience sit with your company for you to get a license easily. You can open your own the cafes and all. If you're looking for to set up something with a small money, you can have your own, you start a small Indian takeaway cloud kitchen kind of business. And or you can have a small cafeteria. Cafeteria is a very lucrative business, as in I think it's worldwide. And then there are opportunities to find a rundown property, refurbish it, and redo it, and then increase the valuation and sell it, and then say make some money here. But I think you need slightly more than 1 lakh rupees, to be honest, because the ticket itself one travel to India will cost you 1 lakh rupees, more than 1 lakh rupees. Yeah.
Okay, ma'am. There's one more question with regards to like if there is an Indian CA and he completes his ICAEW, will the work from UK gets outsourced to India or something like that? Because a lot of work has been outsourced from US CPA from US to India if someone is a CPA. So is the case same with the UK as well?
I will take that one, Atisha. So specifically, if you are ICAEW member, you get the right to sign the balance sheets, but you have to be means you have to get those clients. So I've seen like most of the chartered accountancy firm doing in a collaboration with the UK-based firms, but there are cases where a lot of Indian-based chartered accountants who are into the practice business here in UK now have established a GCC, Global Capability Center, in India. So definitely one can collaborate with them, network with them, and can see like, okay, what are the open opportunities that they can share the business together, specifically in practicing.
Okay. Okay. Thank you so much. Thank you so much, Sumit, and thank you so much, Meenal ma'am. It was pleasure having you guys on board, and it was really insightful session about anyone who's interested to work in UK, and very good session. Thank you so much, guys.
Thank
Thank you,
you.
Atisha.
Thanks,
Thank you,
thanks,
CP committee.
Atish and Pawan. And we didn't hear the lady who was here. She didn't speak at all. There was a girl, right? What was?
She was from the tech team, CPA team.
Okay. Okay. Perfect. Okay.
Thank
Okay.
you.
Thank you.
Bye.
Cheers.
Thank you,
Bye
everyone.
bye. Bye bye.